What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down the numbers that just came out, as CPI did come out and ended up being pretty bad in my honest opinion. So I'm going to break down the number in a lot of specific details, talk about what this means for the Fed and the markets, and how this may affect Tesla's share price for the near-term future. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, out of these 12 free stocks, one of them can be a free Apple share. So please check it out before they run out. The offer ends in just 2 days. With that out of the way, let's get on with the video. So Tesla's down over 3% for the day right now. We are treating the 200 EMA as resistance. You can see Tesla did end up kind of like bouncing off that 290 range support zone right here. We pushed up, got rejected off the 200 EMA again. We are starting to drop down a little bit more, and right now the overall trend is quite bearish, because if you look at Tesla, we have this big gap all the way to the downside, and overall SPY is also taking a big hit, and we are seeing this big correlation between their price actions. Now, why on earth is the market dropping the way it is? Firstly, there's a lot of panic right now. There's lots of fear in the markets after CPI came out, and I want to actually talk about that in a lot of detail. Right now, we're seeing right over here the price comparison between Tesla and SPY. They are almost running very similarly right now, and we are seeing both of them taking a bit of a hit as the price pairs ratio is going up once again. So yesterday in my video, I showed you guys this data right here. All right. And I was showing you that most economists were kind of like projecting CPI to come between here, 7.5 to 8%. And the thing is, it ended up coming at about 8.3%. And my threshold was between 8 to 8.3% being okay, 8.3 to 8.5. I would say it was more on the bad side. 8.3% came. And the reason why it was really bad is because when you break down the numbers, this 8.3% is actually misleading. Because when you see what actually went down, it's going to shock a lot of people. So, right here, the headlines are saying CPI rises 8.3% over the last year in August, tanking stocks and so on and so forth. That is true, right? These articles are telling the truth technically. But you have to remember that this number was being inflated in a way, not inflated, but kind of deflated in a way, because energy was going down and that's what brought it down. And if you exclude energy, it was actually very horrible in my honest opinion. We can see right here, relative to the previous months, we could see it's still up 0.1% just from that comparison. And that's even with the sharp decline in gas prices, as many of these articles are saying. So what is the data really showing us when we break it down? So yesterday I mentioned that the average gas price per gallon in the USA went down in August by a bigger percentage relative to how much it actually decreased in July compared to June. And despite that, right, we got these numbers right here. CPI for all items rises 0.1% in August as shelter and food increase despite gas falling. And right here, the seasonally adjusted price, it gives you a price that went up 8.3% over the last 12 months, not seasonally adjusted. And despite how big of a category energy is, it still had a negative effect on the overall numbers. So let's actually break down the numbers now. And here's where everything is very simple. This blue line right here represents all items. All right, we could see it went up and up and up and up. It kind of went down just a little bit when you look at the month of August versus July. But when you look at all items less food and energy, you look at that core CPI. Check this out. It came down in March, April, May was looking good. Suddenly July, it was basically trading sideways. Not trading, but moving sideways. Sorry about that. Then August comes, huge increase. This means that if we ignore energy, CPI went up, inflation went up. That's not a good sign whatsoever. It's not good. for anyone in America. It's not good for everyday people. It has a very negative effect on them and their lives. If we break down the numbers even more specifically, there were a lot of these increases. There was actually a big offset by the 10.6% decline in gasoline and its index. But besides that, almost everything else went up. So the numbers are right here. We can see all items, they're up 0.1% just for the month to month basis. But for food, 0.8%, which is pretty high. Food at home, 0.7%. Food away from home, 0.9%, pretty high. Energy is down about 5% overall. Energy commodities about 10.1%, like I mentioned earlier. Gas down 10.6%. But besides that, almost everything else went up like crazy. If you look at this right here, energy services actually went up like crazy. Pretty crazy stuff, 2.1% compared to like the last time we saw it. It was like actually only up 0.1%. So it's a big increase compared to before. And if we go down here, utilities, they went up over 3.5%. Very, very big change compared to last time of a negative 3.6%. So very, very crazy stuff right over there. And then if we keep going down to the numbers, we could see right here commodities went up, new vehicles went up, apparel went up, shelter went up. It's just insane how much everything went up. The unadjusted 12-month ending basis gives you an 8.3% on all items. Pretty crazy. For food, 11.4% up. Food at home, away from home, right over here, 8%, and so on and so forth. Everything is still going up. Energy is still up. If you go back like 12 months, it still is higher than how high it was a year ago. So overall, still not looking good, guys, if I'm going to be as honest as possible. Once again, the data was kind of offset by energy, which actually brought the overall number down. Exclude energy, this thing went up like crazy. So the real question is, it's not just about the numbers, and they obviously have very bad effects on everyday Americans. People around the world get affected by this too. Must be hard for everyone in a sense. I mean, everyday expenses become much, much harder to afford. It's very sad to see that happen. And the Fed, in my opinion, really needs to act. So that's where we transition to the second part of this. And that is, what is the Fed going to now do about this? A lot of hands are going to be thrown at the Fed. A lot of questions are going to be asked towards Jerome Powell as the meeting is coming up on September 21st. Now, the first meeting is on the 20th. It's not as big. The bigger meeting is the 21st when they actually announce the rate hike. And as of right now, at the time I'm recording this, we can see right here, if you look at the target probabilities for the Fed meetings, the market already or came very close to pricing in a 75 basis point rate hike by the Fed. And now we're starting to price in a 100 basis point rate hike. So the markets are getting basically ready, super, super prepared for the Fed to be even more hawkish, which will slow down our economy even more, which will really slow down demand, which is in turn going to help bring down inflation overall. But right now, inflation is like a wildfire. It's just spreading like crazy. The Fed really needs to act. Now, the problem with this, from how I'm seeing it, is when you think about it, we have an election coming up. So will the Fed actually go very, very hawkish and actually raise the federal funds rate by 100 basis points? I don't truly know. And that's why the next FOMC meeting is going to be one of the most important of the entire year. I really need to see what happens because this is very serious and this issue is just getting worse and worse overall. Now, if we look at the current probabilities of the target rate hikes, there was a 9% chance yesterday that we would get a 50 basis point rate hike and a 91% chance that we would end up getting 75. Now it changed. Now there's a 76% chance of 75, 24% chance of 100, which means that the market is getting ready for an even more hawkish Fed, as Jerome Powell was kind of hinting at that in the second to last time he spoke at Jackson Hole. So what does this mean for Tesla? What does this mean for the markets? Well, we're continuing to see SPY getting dragged down, and this did actually have an effect on Tesla, not to mention almost the entire market. There were just a few tickers that actually remained green, like Honest or even like Neo. But besides that, we're starting to see a lot of downside kind of perpetuating. So where on earth is SPY headed as of right now? If we look at the daily, and I am recording this maybe like 30 minutes before the market ends up closing. If you look at this giant red candle, it's not looking very good. And you could argue that we are going to be respecting a downtrend. What I'm going to watch for is see this trend line that the SPY has been respecting. How does SPY react to this if we do end up touching this low 390 level? Do we break below it? We could break like a little bit below it, but do we bounce back and try to hold above it? Because if we end up breaking below this trend line and we hold below it, it's not going to be a good sign for SPY for the near term future. Now, if that's the case for SPY, and you have to remember that the market tends to be very correlated right now, whether you're looking at the QQQ or the NASDAQ or SPY, they tend to run very similarly. Apple was also leading the market to go down the way it was. The current candle on Tesla is looking like this. Once again, not necessarily the best. We have that big gap to the downside. We are seeing some momentum that's just not in the best direction. So I'm going to use maybe the 2 hour time frame now and kind of transition more into the technical side. So right now we have this big gap. We're going to look at some more indicators as of right now, and we are seeing very similar trends that are being respected. So looking at the data, we're actually on the 2 hour well below the 200 EMA still. We actually got a 1348 cross like right here. So it is looking pretty bearish, at least from that time frame. On the 5 minute, let's see what this looks like. On the 5 minute, I'm noticing that throughout the day, the overall trend is also looking more bearish than bullish. We are starting to test lower levels of support. And as of right now, we got a crossover right here from the MACD. We're seeing another 1348 EMA cross, a rejection off the 200 EMA. And we are starting to trend to the downside as of right now. RSI is actually dropping right here. Once again, looking more bearish than bullish overall. Now, on a bigger time frame like the daily, we can actually look at this real quick. We're noticing something interesting because what happened was the market looked like it was getting ready to start pushing to the upside. And that's why I kept warning everyone that when Tesla enters this zone, I was a little bit apprehensive about like 309. It ended up happening earlier that we could get a big rejection, and it would really depend on how we react to that key zone, which is why today was a big day. We ended up actually rejecting before even getting there. So as of right now, I want to see how this thing really moves, but it doesn't look like 290 is extremely strong right now. It looks pretty shaky. So I think we're going to have to retest 290 many times to see if we can get that bounce, because if we don't, then the 280s will most likely come. Now, from this standpoint, you can see on the daily, we're actually pretty close to actually retesting the 200 EMA, which could actually come all the way down to that 270 range. So Tesla could end up coming down to the 270s if we get rejected off 290, if we can't necessarily hold it. So please be prepared for that. And right now, the MACD was very bearish, right? We got a nice bounce here on Tesla, right? We started pushing up. But what happened was the MACD was getting ready to curl and flip. We got the flip because Tesla was pushing up over the last couple of days. But right now, you're noticing, look at this momentum right here. It does not look very strong, right? These histograms are very weak looking. They don't look very strong. This is an indication that Tesla's not showing the same bullish momentum as before. It's probably going to start downtrending relatively soon. RSI is also slowing down a bit. So please be ready, guys. The overall trend is looking more bearish. You could see the fact that we're slowly starting to downtrend, like from this standpoint right here. We did make a low right here, and this does appear to be a lower high that Tesla made. So it does appear to be downtrending, and overall, I'm a little bit more bearish than bullish for the near term future. So for tomorrow, let me bring up support and resistance now and just show this to you guys. I'm going to carefully be watching the next support zone, which is around that 290 range. Let's see how Tesla reacts to that if we do get a continuation to the downside, because if that doesn't hold us, if the market does continue to panic and does not get that relief bounce, what's going to be very interesting is a break below that opens room for that 285 level. So please be prepared for that in case 290 doesn't hold. If 284 doesn't hold, then 280 is most likely going to come next. So be ready for those zones. if this thing pushes up, I don't really see it actually pushing all the way back up to 300. That would be very unusual. But if that's the case, we have to always watch for how it ends up reacting, because right now the market's pretty fearful and it does look like downside seems more likely. And I do think it's more likely for Tesla to end up testing 290, maybe get a rejection, come down to the 280s, maybe get a bounce off 284, and hopefully we try to hold for some time and consolidate a bit before we continue from there. As far as SPY goes, SPY is very close to that 394 level of support. I don't see that holding us up for the near term as the market's pretty panicky. And the next key zone would be that 390 if we truly do break below that. And it could actually happen sooner than later. So be ready, guys. Looking at the overall trend, please note that the market right now is pretty much fearful right now. And it does look like, let me close that real quick. It does look like the market is being prepared for an even more hawkish Fed than what people would have initially anticipated. With that said and done, thank you all so much for listening. Do what you have to do. Watch your technical indicators, watch support and resistance levels, and I'll see you guys in the next video. Tesla to the moon, because the long-term future is still incredibly bright. I'm still super bullish for its long-term. It's just for the short-term, the overall market is having its toll on many stocks out there like Tesla. It's not necessarily their fault fundamentally, and it's still doing well. Thank you guys, Tesla to the moon, and peace out.